Send me questions throughout the panel, not just at the very end, but right from the beginning, and I'll put them to the panelists so that we can get some answers for you, the things that you're interested in as well. And I also thought that I'd start with a bit of a poll question, just to judge who is in the room with us. So could you please all tell me which sector describes the work that you do? Public sector and policy, civil society, SME suppliers, large corporate, technology sector. Let us know. And what we'll do is make sure we tailor the session to suit you as well. So get out your phones and fill in which sector best represents the work that you do. Now, we all know in this room that digital technology is playing a huge role in making our world greener. It improves things like tracking where products come from, making sure that suppliers do follow those green rules, and figuring out the carbon footprints of products. Because sustainability, and this is one of the big messages from today, sustainability and digitalisation are inextricably linked. And the EBRD, we're going to hear a lot about the work that they're doing, but they are doing some wonderful work in this space. So let's take a look. So today we're going to be delving into how digital tech can make supply chains even more sustainable. And Paolo is also going to talk to us about what some of the digital tools are that the EBRD has to help. But let's have a look at the Slido results. Let's see if we've got the results from our poll. Does that surprise you all? 52% of people are in public sector and policy. Civil society, 17%. SME suppliers, 14%. The tech sector, 14%. And large corporate, 3%. Really interesting. So you've all taken note of who is in the audience today. Let me introduce our panel to you. We've got a fantastic team up here for you today. Paolo Monaco is from EBRD, as I mentioned. Peda McKenna, Global Head of Core Trade at Citibank. Vivek, next to me here, Agawal, VP of Procurement at Olam Agri. And David Baguette is Director of Business Development at ACX International. Now, don't forget about Slido for the questions. I know some of you might not be comfortable with it, so you can also raise your hand. We have people here with microphones who will come to you. But the lovely thing about this room is I think it can feel a lot more like a conversation because it's not vast. So it's really easy to get involved, and I'd love for you to do so. But let's start. Vivek, I'm going to start with you. Can you just set the scene a little bit for us? How does digital impact the things that you do? Take us through the steps.
Well, so of course, when we talk about the agri plus food supply chain, there are 8 components where we see digital making a big impact. The first one, and let me focus on few of them, obviously I won't speak about 8 together, but the first one is upstream farming. So for us, because the way we buy from the farmers, the key point when we talk about farming is the access to information through digital, which is available to them nowadays. So we have revolutionized the way we are actually engaging our farmers in the kind of data which is being provided to them, the visibility which we bring through some of the digital tools which are there. And it's the very first time that they have access to how they want basically their products to be sold.
And in fact, how do they respond to that?
Of course, the response is good, but then let me also, look on the other side of it that there are some challenges which we still need to mitigate, which is obviously in terms of the digitalization to the first mile logistics which is there. I mean, we always talk about last mile, which is how your food products, etc., reaches the consumer, but there's equally and even bigger challenges in the geographies which we operate when it comes to the first mile which is there. So the need is there. They obviously want to do as much as what we can provide to them, but at the same time, there are challenges in terms of infrastructure, technology, which is something which we are mitigating as an overall supply chain manager of farm to fork value chains. So that's basically in the upstream part where we actually do what we do with our farmers. The second and the most important part also is basically in the processing and the midstream part of the value chain which we play. With a lot of Industry 4.0 and smart technologies which we have, which have been introduced in the past many years, we've been able to cut down on the waste, whether it is food waste or it is related to energy efficiencies and the facilities which we have, which is eventually then making us greener and cleaner in the way.
What are the kind of figures around that? I mean, that's great to hear.
So the figures is basically we set ourselves a target of 50% renewable energy, and we are actually quite close to that in terms of really achieving 50% of that coming from renewable sources, whether it is something which is generated within the facilities which we have, or it is actually renewable in terms of what we buy from the outside market.
Okay. Yeah. Peter, can I ask you, what does Citibank do at the moment to try and incentivise sort of sustainable practices in the supply chain?
Thanks, Lucy. So it's our clients, major clients around the globe, like the OLAM, a lot of us is really trying to help them as they embrace all these challenges that are ahead of them and the opportunities that are there. As a big global bank, I guess we have a responsibility ourselves. We have our own targets, $1 trillion in sustainable financing by 2030. So we're right on track in relation to that. And that's really driving everything right through the bank. We have clean energy transition teams helping, working with clients, advising them in terms of what they can do in terms of procurement. There's obviously a huge amount of CapEx and demands that are required there. And many of these clients transitioning as well from what they have as very profitable legacy businesses. So when we think about clean energy transition, how do they transition from those legacy models through that into capital investment associated? So working a lot with the export agencies and the development authorities around the world to do that also. But then in terms of our own business as well, we also look at many things like our diversity and inclusion. It's not always about environment, which is huge. We look at the sustainability, inclusion, and very much a driver in terms of transparency around the gender and racial representation in our staff, and making sure that our people look like the communities that we live in, and certainly that the pay gaps as well are rectified as well, and giving transparency and reporting around that. From a business perspective, we look at it, I suppose, as a global bank. Our clients, given we operate in almost 100 countries, you would say our network and what we do, and also then our institutional investors. So working directly with clients to help them transition, as I've talked about, whether it's in the utility space, if you think about rolling out smart meters, we're not going to get charged as consumers $500 in our next electricity bills. So how is that financed and spread out over multiple years? Or in the agri space, as Vivek mentioned, or the utility space, trying to optimize routes. And when you think about like the Red Sea disruption and what that is doing in terms of greenhouse emissions for the shipping sector, given the longer transition and travel cycle, so trying to work with shipping industry and clients there. Then we work across our global network with our development banks, with our local and regional bank partners as well. A lot of inclusive finance, and we've launched new loans on the inclusive finance and environmental finance side. And finally, I'll just say on the institutional investor side. So I would say it's a journey. Originally, there was like self-certification around environmental targets, but week on week, month on month, it's just growing exponentially in terms of scientific targets.
Because when anyone says to me, I'm on a journey or it's a journey, I start to think there's been some resistance there at the beginning. I mean, has the mindset changed? Are you feeling...
Well, I think, look, as a banker and on the risk-taker side, when someone tells me a borrower is going to self-certify the collateral that they have in their warehouse, never sits very well with me. So when someone is self-certifying, they're adhering to whether it's emission targets or labour targets. So certainly having third-party, credible, verifiable data. And talking about digital, what is it doing? It's always a bit of a dream of mine. Is how do you bring the financial and the physical supply chains together? And digital brings transparency to that supply chain, and hopefully that transparency allows more, credibility and capital to come to bear, and that gives SMEs more access to finance as well.
I mean, David's nodding away when we talk about transparency, because the need for greater transparency and traceability in supply chains, and that's going to come up a lot, I think, in the discussion today. So tell us about blockchain, David, and the tech around that, how it helps. Briefly.
It's a loaded question. So I think it's a good point to start at blockchain is not crypto. So I think everybody has this misconception on the negative side of blockchain, especially in the public sector, that there is some connection with crypto. So for this conversation, let's put crypto aside and say that blockchain is just an immutable, transparent ledger. For the bankers, that's an easy thing to think about, right? A ledger that you can always see, that cannot be changed. And what blockchain is doing is it's opening the world, it's opening a ledger technology to the entire global community, allowing every person on the planet to be able to see transactions as they're happening, monitor transactions, record data, look up that data, and then feed it to either the bankers on the banking side or to the consumers on the trust side, right? And what we're really seeing from a global perspective on the use case is that this is opening an avenue for developing countries, for rural markets to really have access to technology that allows them to partake in a global economy at an affordable way, in a trustful way, in a transparent way, in a way that allows the entire ecosystem to really trace and track every transaction that occurs on the blockchain. And I'll just give a quick example, and then because I think it kind of wraps things up. From a very safety perspective, if we look at how this is being utilized, Walmart in 2016 had an E. coli breakout on its leafy greens. It took Walmart 6 days, 18 hours, and 26 minutes to do a full-on forensic investigation on tracing and tracking those leafy greens. Several years later, they implemented blockchain with the same suppliers, 25 suppliers, upwards of dozens of middlemen in between. And an E. coli breakout happened again. They were able to do the same forensic research utilizing blockchain in 2.2 minutes. So this is just a small example of how it's bringing trust, it's bringing information. It's good for business, but it's also good for the suppliers because you have less food waste and things can be stopped. We can go into more details later, but I think that's a kind of a good example to bring it up.
Yeah. Slido is up for questions, and I'm pleased to say I've got one already, and it kind of ties in, Paolo, to what I was going to ask you anyway, to set the scene in terms of what EBRD is doing. How can we ensure that digital supports green and sustainability in supply chains, with some examples? So tell us what the EBRD have got, what tools you've got.
Yes, David really tailored his answer. Let me try to do the same and not just say the video said it all about what EBRD does. So being a development bank, the additional activity that we have that most other sort of lending parties wouldn't have is work that we do with SMEs. And just to bring the context and give a little bit of context, we're working with SMEs in emerging markets, which is the totality of the business that we do. So when we're talking about digitalization, when we're talking about data, we're really talking about the lowest hanging fruits, because we're talking about businesses that often do not have any tracking of data or any recording of data. So historically, what we've done is work with 3,000 to 4,000 SMEs in our countries each year on improving their operations. And a large part of what we're now doing in terms of improving their operations through the provision of knowledge, know-how, consultancy service, advisory, has been focused on digital. And at the beginning, I can say that the projects have been very, very basic. We're talking about management information system, we're talking ERP system, we're talking about really the basis of it. And over time, I think we evolved in the way that we do this kind of support to SMEs to focus more on the recording of data that are related to sustainability, that are related to improving their standards. Let me give you a couple of examples, so just to make it a little concrete. Some years ago, we worked with a part of Coca-Cola that works in Turkey and in the Caucasus, on supporting a large part of their distributors with data collection. And the angle that was sort of originating this project is the angle of compliance. Which is not your most, what people would imagine at first. But it was very important for Coca-Cola to know that the distributors that they were working with had the ability to know who else they were working with, the products that they were selling, and so forth. And another example that we had, it's interesting because it's kind of in two stages. In the auto supply chain, for a large tier 1 manufacturer, we initially worked on improving the data capabilities of their tier 1 suppliers to be able to interact better with the production system of the tier 1, and then that project has now moved into the collection of data for carbon emissions and other commodities utilization. So, yeah, I'm not going to say it's a journey. Then I know what the question will be if I say that. But let's just say that while we do a lot of things, SMEs is really at the core of our offering. And we know that obviously no single supply chain is just made of SMEs. That just doesn't happen anywhere.
One of the themes while I've been here, and the other panels I've done as well, has been around collaboration. And everyone wants to see how people can work together better and how to make that process more efficient, more smooth, how relationships can deepen. So Vivek, how does collaboration and your industry work in terms of what you've got with digital innovation and how that helps you collaborate?
Well, I would actually start from what Paulo was just mentioning. So these are, the most important advantage when you actually go digital, howsoever small you start with, is equal access of information to anybody who's part of that, right? So that's the biggest advantage. And when you provide...
That plays into that transparency thing.
That brings in the transparency. Yeah. And once you have the right level of transparency, then comes the most important step, that now we know what we want to know. Each of us understand it in the same way. Let's collaborate. Let's improve. So that's where, a lot of digital tools, and specifically the one which we are also now, designing something which is fit for purpose, where we have all 10,000 suppliers which are part of that. We call it as in ProCon, the way we say it. And these are basically the suppliers which have their data easy to use. You can actually use it via emails, etc., etc. So technology, infrastructure requirements in the geographies which we operate, connectivity is not something which is actually inhibiting them not to use that, which might be the case with many other on-the-shelf tools which are available in the market. So that's one way in which we are actually bringing all our non-commodity suppliers together on a platform. Obviously, at this point of time, we say that we would want our RFX process to be as transparent to all the suppliers which are there, but eventually it goes in the direction what you were mentioning, that how do we actually have performance data, and going beyond cost capital, how we actually start looking into the sustainability aspect before we actually finalize any tender or any request for quotation. So that's one way in which we are basically collaborating with them. The second is, and this is actually from a sustainability point of view becomes more important, which is basically dwelling on the scope 3 emissions. So we all know, and obviously, that this is one of the biggest and the most challenging part of the entire, when you talk about supply chains, more than 80% is basically your scope 3 emissions. And a lot of them are basically our suppliers, which are actually supplying commodities to us. Now, we have an application which is, I'm pretty sure most of you have heard about it. It's part of the group companies of Olam called as Terrascope. And this is where the carbon footprinting is basically allowing us to get into the hotspots of what needs to be done. So there's enough discussion around that the data is not available, the emission factors has to be more precise. Of course, we will live with all that. We will evolve and we will improve. But eventually, now we know what the hotspots are. This is something which is collaborated with the suppliers who are basically part of that, and then eventually designing some nature-based solutions, which is helping us to really work on that, because nothing succeeds like success. We can always talk about the data not being there, but eventually, a couple of years down the line, what matters is that have we been able to show the results which actually each one of us want to see in the value chain. So that's a bit of on the non-commodity side and as well on the commodity side, where there's a lot of collaboration, which is leading to some results which you obviously want to communicate.
I know you guys want to get in, but better start with you and then...
Just around, so we do a lot of supply chain financing programs, and you'd have an anchor client, and again, talk about a journey, but they originally started out very much as a capital arbitrage, and benefit was accruing very much to buyers. But now, absolutely, it's much more the collaboration is there between their suppliers and deep into the supply chain, because unless they change, our major multinational clients aren't going to achieve their Scope 3 emissions targets and aspirations from that perspective. So you've really seen how that whole program financing has transitioned from probably, a very large kind of corporate maybe using its power for its own benefit to actually really kind of, working in collaboration and partnership with its suppliers.
And you're starting to see that happen more.
Absolutely.
Yeah, Paolo.
I've been told that we can ask questions as well as answer questions.
Yeah, I've told the panel, it's not just you guys that can ask questions. They're allowed to ask questions.
I've never done it in a panel, moderator in disguise. So just wanted to ask Vivek and Peter the same question, which is, so we're focusing on data, carbon emission reduction, amongst others. Data means systems. Systems means money and expenditure. And so is it not the case that actually what is happening is we are, in a way, forcing buyers to only work with large suppliers? Also, the other way around, when it comes to carbon emissions, it's just a simple calculation. If you focus on your biggest producer, you're going to achieve your target. So while we say that we all want to work and support the SME sector, these very metrics, that are very good metrics, have some sort of perverse incentive to the opposite? Or do you see any value in my...
Absolutely. I think there is a double edge to that. If I even look at our own technology investment and how we approach it, very sizable every year, would have been very much proprietary-led. But now it's really moving towards stakeholder and software management of various different providers, whether it's people that are focused on the logistics side, people are focused on the agri-certification side. So it's really coming together in terms of a large, like the collaboration point, a large number of software providers come together to be able to provide the overall solution. That drives down the overall cost potential of financing. So benefits may accrue to the SME through that in terms of access to finance and the cost of finance. But there is that requirement for investment, as you say, and that's really where I think that partnership with development organisations is critical, because you're right, SMEs may not have the track record for maybe a payback period for 5 or 10 years for that investment. But I think the availability of software and software as a service is bringing the cost associated with technology solutions down also.
You'd agree with that, Vivek?
Yeah. So essentially, that's something which we see happening, and we have actually transitioned from, let's say, hung up on finance not being available to something that let's do what is possible for us to do as much as possible. And I think the biggest change which we see is the availability of software as a service and also data as a service. As much as you use, you actually pay for it. And when you actually start getting the right traction in terms of what you're investing, then definitely there's more which comes your way. Yeah.
David, I'm going to bring you in here with a question that I've got that ties in nicely with a question from the audience about sort of specific blockchain applications that are showing real promise. But one of the people in the audience has asked here, for businesses that are based in regions that are more vulnerable to climate-induced catastrophes and earthquakes, what are the specific digital tools that are available to build up resilience? So kind of addressing that and perhaps some of the other tools as well that are helping with green commitments.
Yeah, that's a loaded question because it's very specific to what you build on top of technology to manage those types of systems. So I think if we go to the beginning of accessibility to tools, we're talking a lot about SaaS. We're talking about a lot of availability of certain products that are on the market, but many of these products are expensive. Some of them are not available in certain parts of the world. And this is why when we look at blockchain and we look at what it's doing and what you can build on top of blockchain, specifically decentralized blockchains, is it allows everybody to have access to it without the cost inhibitor, right? Internet connection is really all you need. Computer is all you really need. A cell phone is really all you need to access these if you have the right applications on top. For vulnerable communities that are dealing with certain types of impactful situations, I think these types of tools allow them to better diversify what they can do in those climates, right? It can allow them to change up their business models, really kind of pivot and focus in on different areas because they have technology that's readily available, that's open sourced, that's in their hands, that doesn't require the type of investment that maybe investing in a certain SaaS platform would require. From the public sector, I think this is really attractive because it's a win for you in dealing with SMEs, startups, different types of entrepreneurs that are looking for low cost but high innovative solutions. I want to add something that, if I may, on top of what everybody here was kind of saying. A lot of talk that I've been hearing in the hallways is that a lot of the projects that are being implemented have a cost and a risk, right, on top of it. That is oftentimes slowing down what we're providing to communities, whether it be for fighting climate change, for being, fighting CO2 emissions, for being more green in their practices. And I think what I want to kind of highlight today is that blockchain and the technology, underlying technology, has a win-win for all communities, right? It has the win for the public sector because it promotes transparency and safety. It has a win for the private sector, especially the SMEs, because it's open source and it allows you to have accessibility. It has a win for the banks because, even the World Economic Forum did a study on this. There's a 15% reduction in costs when you utilize blockchain technology because you're removing a lot of the inefficiencies, you're removing a lot of the barriers to transparency. So I think with all those kind of combined, I hope I answered the question, but it kind of allows for vulnerable communities to really take part in innovation while at the same time allowing them to pivot and really be a part of their business.
And very briefly on the second question, what specific applications are you seeing in terms of working with verifying green credentials and green commitments?
Yeah, so there's several communities that are using it, but I think if we look at kind of some of the big names, we've got Hyperledger Fabric with IBM is kind of the mainstream blockchain technology that is available to the global community. I think companies like De Beers is really utilizing it really well to track and trace and certify diamonds and precious gems and metals. They're a big player. Now there are smaller companies that are getting involved in the eco-friendly, the agricultural market to really track and determine which suppliers are using which suppliers are using what type of chemicals. I think when we look at those those are the real game changers. Those are the ones that allow us to really keep communities safe, to track down products. I'm a big fan of Tony's Chocolonely. I don't know if anybody has heard of this. But for them, when they started talking about doing fair trade and doing green and stuff like that, the reality is all that was marketing and all that was trust, right? We trusted that they were doing that. Now they're looking at blockchain technology as a way to certify that trust, to really open source the trust. And I think these are kind of products and things that are out there on the market that really kind of are going to work for the rural and developing communities.
Here's a question, and it speaks to one of the things that you were talking about, Paolo, and the question that you raised. What can we in the public sector, a lot of people in the room in the public sector, and on the national level, do to help support these smaller SME remain competitive? Because the expense is locking some of them out.
I always see the chocolate, but I never bought it. So after this,
it's really good. And my son's name is Tony. So every time I travel, I come home with a Tony's Chocolonely. He thinks it's specifically for him.
He has T-shirts. He has all the merchandise. I can imagine.
It's very visible. Okay. Chocolate aside, so I guess EBRD being owned by government, we can say that is a semi-public institution. Half-half, focus on private sector, but obviously our sourcing, our funding comes from government. So it goes back to the partnership model that we were discussing before. As part of our DNA, is the working with other players in order to support the SME sector. It would make absolutely no sense for us to try and do that alone. It would just be a suboptimal use of resources. So one thing that we do that is perhaps a little secluded from the rest of our activities is working with governments on policies and bringing in advisors and bringing in people with knowledge of programs that have happened in other countries to try and replicate to emerging markets. So that's a little bit of a, one activity that we conduct.
Can I just ask, Paolo, in terms of this question, is this what's actually happening? Are smaller SMEs being locked out because it's too expensive?
Look, when it comes to policy, it's very difficult to have, a quantification of the work, and those are often multi-year discussions that you're having. But ultimately, once you have a change, is a change that tends to stay, and is a change that then inspires other change. So, but it's a bit difficult to quantify things. Okay. And also it's uncertain patterns because these days governments tend to change quite frequently, a bit more frequently than used to. But I'm Italian, so I'm used to government change. Yeah. So, but you need that consistency in governments in order to work on policy. But that aside, what we also do a lot is we partner with buyers. We partner with we have a partnership with Citi. A very strong partnership, and for instance, we work on the supply chain financing programs together. And aside from providing funding, that goes without saying, for our SMEs based in country operations, we also provide incentives. I was going back onto the money thing, but SMEs that they have money, they just have so many priorities that they need to spend money on, that they may not understand that sustainability and improving the carbon footprints is actually good for them. So a little incentive at the beginning is a good thing.
Okay, and there's been a question from the room as well. And I mean, we've talked a lot about transparency already. And one of you is asking, do you think that these expectations, I'm not sure which of you would like to answer this, the transparency expectations are actually going to stop some of these big companies from adopting digitalisation? Yeah, David.
I think the short answer is yes. And the reality is because we as the consumers will have to expect it. We begin to expect it, right? And the more resources we're given to inform our decisions and inform our expectations, we do it. We look at the history of food products and the way safety has worked. We are getting closer and closer to transparency, but we're not there yet, right? And there's tools now available, like blockchain, as I'm talking about, but there's other tools available to increase transparency to the point where if everyone has that information, you have to join or you'll be excluded. If the Tony Chocolonis of the world are utilizing a system where everybody can trace and monitor where the products come from, what certifications each one of the suppliers and growers has, where the product's been, where it's traveled to, others will join them or lose business, and then the big players will just have to join suit as well.
How far away are we from that, though, on our journey?
Well, I would hope that we're as close to as fast as technology can get us there. And I think that's where we're seeing most things. I mean, I can remember being a kid and looking at a cereal box and not seeing any of the nutritional information, right? I can remember sitting there reading the box and not seeing that stuff. Now it's part of my kids' daily reading material if they have a box of cereal to see that stuff. That is now mandatory. That is everybody's doing it. Everybody has to. So I think that's old school technology. Now, if we look at today's technology and data and the information that's available, I think we can leapfrog in the level of transparency that we have for consumers, and thus big companies are going to have to join that or be left behind.
Paolo, yeah?
No, just want to say, but at the same time, if you're making buyers responsible for all the things that are happening in the supply chain, in some supply chains it's really very difficult to track. Even if you have all the tools, you have all the data, you have everything, I mean, at the end of the day, it's someone else's company, and they may run it in a different way. And if you're going to have issues because someone has made mistakes in Tier 2 or Tier 3, I think a very reasonable solution would be to shorten that supply chain and be more in control of it if you're going to pay the price for any mistakes. So that's also, I think, an unwanted effect that has not really been thought of that would happen over time if you're really making people pay for mistakes further down the chain.
I think that's a fair point from Paolo. In terms of, if you think about the, is it the EU Corporate Sustainability Due Diligence Directive that was just, I think, voted in favour by Parliament recently, so it needs to go through its final stages. But and although it may have been watered down, it's still very punitive on the larger companies and the due diligence that they have to perform on on their ecosystem and counterparties they're dealing with. So Vivek and I were chatting beforehand about originally, and clients will come to us and ask, what sort of financing incentive can we put around this facility if we're going to invest in this green energy or whatever the initiative was. And there really wasn't any sort of benefit that we would have from a capital perspective. But the reality is that from a risk, even from David's point there, if clients aren't thinking about this and embedding it in their business model, then we have to think about their future success. And therefore, they are riskier if they aren't embedding that into their strategy. And that drives also their access to finance and investors' view of them. Then you've got the regulatory, so the stick side, so like the corporate due diligence directive that's coming out. And that does place more burdens on these companies, and the penalties can be immense. They're based on a percentage of turnover. So I think to Paolo's point, yes, if that risk is so immense, companies may start to look at stepping back or streamlining their supplier base. So certainly a risk to think about. Yeah.
That's interesting. Vivek, can I ask you a question from the audience? Given that agri-SMEs are reliant on natural ecosystems that are being depleted, how can they be supported to incorporate biodiversity preservation in their practices? What's your view on that question?
Oh, well, of course, the deforestation norms are there. So, and we know that from an EU deforestation point of view, there are 6 commodities, and anyone and there's a traceability part, which is the most important, transparency and traceability part, which comes in. I would say that, we have to have that level of transparency in the entire value chain. And of course, as the regulations say, that after 2020, if there is any deforestation which is happening, then it needs to be informed. And then, of course, what we have been discussing is about the penalties which are part of it, which is 4% of revenues as in penalty in case that is the case and it has not been reported by, let's say, the ingredient suppliers, or let's say the upstream supply chain companies which are basically working into that area. So that's one thing which I would say. Of course, there are nature-based solutions. There's obviously, you can prevent deforestation, or you can actually go into something which is ARR, which is afforestation, reforestation, and revegetation of the areas, which helps you in not only improving the yield, but also in terms of the carbon sequestration in the oil, in the soil, and obviously more on the carbon credits. So those are some of the nature-based solutions which are there, which is also in terms of regenerative agriculture, wherein you work together with the farmers, you work together with the fertilizers companies, and see how do you really improve the health of the soil. There is obviously the other aspects of alternate wetting and drying. So this is something which is more prevalent in the rice farming, wherein you actually tend to preserve as much water, and also the methane emission is also, I would say, minimized in that case. So these are some of the nature-based solutions when it comes to really tackling the biodiversity and the deforestation which happens in the value chain.
It's great that you're sending me questions, thank you. But does anyone have one that they'd like to ask in the audience before I continue? No? Peter, can I ask, you raised this in your very first answer. You talked a bit about ESG in your final point. So someone would like to know if there is a correlation between ESG, or what the correlation is between ESG and digitalisation.
I guess it's about the data and transparency in relation to it, and validation. That's it, really. And then the depth of how far that can go into the supply chain as well in terms of it. So whether it's very, very difficult for a small SME, maybe in certain, say, agri or certain other segments, to be able to get that data in a credible and transparent way. And that's really important, to be able to validate the information for us to be able to hit our targets and for our clients to hit their targets. So certainly the digitization helps on that journey. It also helps in terms of operations and infrastructure. If we think about blockchain, for example, just to give an example, we're working with one of the canals whereby we're working on smart contracts. So instead of a tug having to go out, imagine the diesel pumping out the tug, going out to the ship, all the paper documents, all of that gets eliminated, and it's all the processing of the ships going through the canal with the authority is all done through smart contracts, and then the payment released all through that. So all of a sudden that digitization is removing emissions, it's removing paper, and you think about that in just one process in one little ecosystem, and you think about that then on a global scale, it's got a massive impact.
What about, we've talked briefly about government regulation on supply chain transparency. How much is that changing how businesses track and report on their value chain? And one of our audience members would like to know, are private standards effective? So I guess government regulation and then private standards. Paolo.
So part of our job and part of our mandate is to be able to prepare companies for upcoming regulations. And another part of it is to try and find those companies that want to before anyone else, engage in practices that are well above what market are doing in terms of ESG practices. I think, brutally honest, I think, the recent regulations that we're seeing about forcing buyers to have effectively to assume liabilities for things that happen further down the supply chain may have the complete opposite effect. In fact, I very much believe that is the case, and unfortunately, I also think that there is
Are you seeing that happen already?
No, because he hasn't been put into
it hasn't
practice yet,
gone.
but or
That's your
enforced
concern.
properly. But I think that the only way that will come around to it is that it will happen, and then after 5-10 years, someone will look at the data and will see the real effects. I think the role of government in regulating supply chains, I mean, definitely should be there, but by definition, his supply chain is multi-country. So you can't have Germany coming up with a certain regulation and the US coming up with a different regulation. But you need uniformity across all of them. Otherwise, you're going to affect the trade flows. You're going to affect normal business. And I'm just a great believer of the fact that you should let buyers and sellers decide between themselves as they are grown-ups.
We talked about the collaboration.
Everyone's nodding on that one.
Collaboration, though, I think there's an immense capex demand across all participants in the economy to get us to where we need to go. And siloed thinking, individual regulations that are different in every single location makes it difficult because there's no scalability associated with that, and that is an impact in terms of return on investment when you're looking at it. So certainly, kind of coherent sort of regulatory collaboration would be very, very beneficial. So certainly, those of you that are on the policy side of it, I request your involvement on that front to certainly advocate to reach out with other countries, better collaboration across economic cooperative bodies and the likes to try and merge their approach to this.
Any questions from the audience? There's one here, and it's a nice one as we start to come towards the end of the panel, and it very much, I think, is hopeful in a way. What are the tangible innovations that the panel would like us to know about? Asks this person. What is something that we can enact and do tomorrow? David, starting with you.
You always get the most difficult question.
Yeah, so I think there's several kind of tools that you can use right now to look at the landscape of the industry or supply chains or anything that you want to see more transparency, right? I think Walmart was a great example I brought up. They have the leafy green supply chain. I think they've opened it up so others can see it as well, so that you know exactly where your food's coming from a greens perspective. I think Maersk has a pretty cool product on tracking supplies and shipments going across the globe. You can check that out. What I would really do as consumers is just look at the products that you're consuming and see what kind of technologies they have on the back end and see which ones are implementing tracing and trackability for the supply chain, because it's constantly evolving. And I think these are the companies that you tend to start to respect and trust and understand and are setting the pathway. So those are some of the examples, but I think as consumers, you mentioned it's not our responsibility to hold I think that we need to hold the governments accountable, but the governments need to obviously hold the regulations accountable. But it's also our jobs as consumers to decide what we put in our bodies, what we buy. And I think if we're constantly looking at the technologies and the transparency of the companies that we're dealing with, you'll kind of see who's leading the way when it comes to technologies and innovations.
Peter, have you got an example?
Paper. Everything that you do, whether it's signing commercial contracts or from an advocacy perspective, what can you do to eliminate paper? It helps convert all that to data, allows processes to be digitized, it speeds it up. On the supply chain finance side, for example, we took the onboarding of SME suppliers down from maybe 90 to 120 days to effectively being same day or within 24 or 48 hours as a result of that. So certainly it helps. So whether you're an individual, whether you're an SME, whether you're an institution, a development authority, everything that you do. I had to sign 26. I was executing an agreement, 26 pieces of paper. I haven't signed my name in such a long time.
It didn't look the same from the beginning to the end, I'm sure, the scroll.
Last year I received a document. It had wax on it, a wax seal on it. So they still exist out there. Please, whatever you can do from an advocacy perspective. Yes, a wax seal and string. Yep. So please, whatever you can do in your own companies, you maybe have to change your memos and arts. It's worth it, and that's small changes we can do as either individuals through to our roles in corporates and institutions.
Vivek, what's worked for you that you'd like to share that people could enact from, say, tomorrow?
So
I take away from this panel.
I would say no points for guessing here. For me, it's AI, and we can say it's generative AI or various forms of artificial intelligence, which is now there. And in the very first question, I spoke about various components of a food value chain, and we spoke about upstream farming and manufacturing, processing, so on and so forth, and retail. That is all what we have discussed, basically putting the power in the hands of consumers. But at the same time, there is something which is very important in the whole value chain, is the choices which the R&D people make in terms of sustainability. And this is where the difference lies, that if I have credible data and artificial intelligence available in terms of climate, nature, and livelihood aspects of the ingredients which I am choosing to put into any new recipe which I am bringing in, or any new product which I am bringing in, I think that's going to be a game changer.
Wow. Okay. Paolo, for you?
Yeah, for us, for me at least, is I guess a bit more basic in terms of technology. But given that we do a lot of know-how sharing with the SME sector, knowledge sharing, what is very important is the ability to connect to no longer thousands of SMEs, but hundreds of thousands of SMEs through the creation of online courses, good content. And then we can really channel that content for a particular supply chain in a particular country, making it very available, making it in multiple language, making it very, very inexpensive vis-a-vis what it used to be, getting people in a class. I get it, it's more engaging, but it's just a different scale. So for us, the platforms that have emerged over the past few years have been really instrumental in increasing our reach. Are we allowed to ask questions to the audience? I mean, we
yes,
broke all rules.
I'm in touch, and I think
are we allowed to single out individuals? Okay, so
brace yourselves.
Yeah. So at the beginning, there was in the stats there was a 3%. There was 3% large corporate. And I don't know who that person is and whether that person wants to come forward. The question is not very difficult, but I wanted to ask how has the increased availability of data for the supply chain of that particular corporate changed their objectives in terms of managing the supply chain? If the 3%
anyone in the audience
exists,
willing to answer that? Just to give us your perspective, it would be interesting to hear.
you have the right to remain silent.
No one wants to contribute. How do you imagine it has then? What would be, what are some of the feedback that you have had about how it's changed?
Oh, just very focused on decarbonisation. That's it. And decarbonisation, water consumptions, critical raw materials. Yeah.
So someone has asked here that they spend a lot on R&D activities aimed at lowering CO2. How can private companies better support the digital revolution when it comes to developing countries? Who wants to take that one?
I think in developing markets, you just need to provide bigger one-off incentives. I think that's what you need to do. And also more focus on knowledge sharing. They need to understand why that is important for their business. It is very true that these days, you can just change to another export market that may not be so caring about these metrics, and you'll be fine. But ultimately, you need to adapt, and the earlier you do it, the better it is. But as I said, I think in emerging markets, it requires a bit more of a push, one-off push.
Would you agree with that, David?
Yeah, I think it's a good point. I think it needs to be incentivized, right? I think there was some point in time when we started this conversation that it was done out of the goodness of our hearts. You know, we were doing it as SMEs, we were doing it as business owners because we thought it was the right thing to do. But now I think there are tools available. Heck, there's a blockchain entirely developed around tokenizing carbon credits, right? And giving small and medium-sized businesses the opportunity to partake in not just doing it out of the goodness of their hearts, but actually be financially incentivized to take the efforts to do things that cut down on CO2 emissions. And I think that goes with anything. It's not just CO2 emissions. It's everything. If it's deforestation, if it's protecting water, vulnerable water environments, if it's anything we can do to protect, I think if we incentivize and we financially motivate on a win-win basis, then we can see those areas cut down. And it doesn't always have to be the banks and international organizations losing money on these projects. There's ways to do it where we incentivize both to get a win-win out of it.
Peter, did you want to add to that as well?
Yeah, I think it's, again, the incentives are there absolutely in order
So they are there now?
They can be there. No, but I think in terms of it also, in some of these countries, I think it's about gathering communities together. We talk about collaboration, so you get a bit more scale around it as well in terms of adoption.
Okay. Vivek?
So I think picking up from what Peter has said, and I think the most important point, other than what has already been said, is making the digital tools for emerging economies and SMEs there fit for purpose. We cannot use the same thing everywhere. It doesn't really work. So the tools have to be customized, they have to be simplified, and there's, I would say, a lot of tailor-made training, awareness, coaching, onboarding, and collaboration, which is something which is required to operate in these markets. So more human touch, I would say, in spite of all the digitalization which we can do.
And that's available? I mean, I think that's one of the other questions that people are asking. Is this kind of training, this kind of information available and accessible and affordable?
So depends on, of course, where do you want to go. So if you really, sitting here, if I think about something with this 2030 or 2050, the science-based targets which we have, I would say that it is not available, not accessible, and not affordable. But if I really look into, out of all what we have committed for 2030, 2050, break it down, we always say it's a journey, but obviously there are milestones. If I really look into a short-term 2024, I would say it's all there. Okay. It's a matter of doing it, yeah.
A lot of it is available, I would say.
Okay. Paulo, we're almost ready to finish. The time has flown by, but a final thought from you, perhaps, if I can one more time use the journey analogy. Where are we at? What would you like everyone to leave with, the message that you'd like them to leave with today?
I think, heavy lies on my shoulder, responsibility of the last few words. No, just really, not saying anything particularly innovative, but while partnerships are more complicated because they are, at the end, agreements and languages that are sometimes different that need to be understood, for us, for international financial institutions, is really important to partner with financial institutions, with big buyers, because otherwise we cannot have the impact that we want to have on the SME sector on our own. So we're going to continue on that path. We're going to continue on knocking on doors and try to explain what we bring to the equation. And we'll just keep doing that.
Thank you all very much. You look like you wanted to say something, Peter. You've got a final inspirational word for us. It's been really good to have your questions as well, so thank you for contributing to the conversation. I hope you enjoyed it and enjoy the rest of the day, and thank you so much to the panel.